You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 15th day of October, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the homepage, there's a big microphone. Can't miss it. Click it. It'll take you to another page. Follow those instructions. This will take you about 30 seconds. But it's got a lifetime of benefits. You'll be able to join the show each and every day with one-click access, and you'll have access to the chat box so that you can participate in the discussion. Now, there will be days you're out of the office, away from your desktop, so just point any internet-connected browser on those days to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. Let's open with a word of prayer. God, forgive us for the times we've failed to treat each other as your creation. Forgive us for celebrating unloving behavior in our candidates and our leaders. God, as we approach this election, we call our leaders and political candidates to a new level of respect and civility. Remind them that you are sovereign and that the wisest choice we can make is to serve you and to serve others. May there be a new movement of collaboration and respect in our nation's capital and throughout this country. God, please give your people the strength to lead by example with radical, world-changing love. In Jesus' name, amen. Amen.
Amen.
There's the
Amen.
echo. All right. Guys, let me give you the numbers here real quick from around the world. These are the cash markets, the indices, as they're called. We'll start here in the U.S., where the Dow's down 137 points. NASDAQ down 114. S&P 500 down 22. Russell 2000 up 2. In the commodity basket, crude oil down 83 cents, trading 40.21 last. It's a drop of 2%. Gold up about 90 cents, trading 19.0820 last. Silver down 17 cents, trading 24.22 last. In the Asian markets at the close, the Nikkei dropped 119 points, Shanghai dropped 8, and the Hang Seng fell 508. That's over 2%. And in the European markets, FTSE down at the close 102 points, almost 2%. DAX down 324, almost 2.5%. And the CAC down 104, over 2%. So, probably don't have to say it, but it was a red day in Asia. Really red day in the UK. And it's a mixed day here in the US at the moment, only because the Russell is positive by 2 points. That's the deal. So now Michael is going to take the screens and he will give us a recap of everything that's happened since Wall Street opened this morning. The live training rooms open every day, every Monday through Friday, every trading day, 9:30 a.m. to 11:30 a.m. Eastern. This is where we teach our strategy, our methodology. Everything you see us do and talk about, that's where you learn it, in the room with Michael. And there's your screen. And
There
put
it
it in
is.
position.
Okay.
All righty. Okay, so Michael's going to go over everything that happened this morning with you, and when I come back, we'll go over the Logic 247 alerts, the Concierge Trade Alerts, and today's Thursday, so that makes it Dr. Tom Day. So we'll be talking with him a little later in the show.
Okay. And a reminder to everyone, it is Thursday, so we have a partners meeting tonight at 9 p.m. Okay.
Yes.
That's 9 p.m. Eastern time.
That's a good point. And if you want to be in the partners meeting, you have to be a passport holder. And becoming a passport holder has never been as simple as it is right now. All you got to do is go to EminiFuturesTrading.com. Take it away, Mike.
All one word. EminiFuturesTrading.com.
All one word.
All right. Here we go. Good afternoon, everyone. Today is Thursday, the 15th day of October, 2020. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, it was rough trading today, really. We had one awesome trade right at the end on gold, and it was like lightning fast though. So you had to get into it, put your target on, and then it snapped up, hit the target, and pulled right back down. but I'll show all that to you in just a few minutes. Today we made 2 ticks in the euro, 1 tick in crude, 24 ticks in gold, and 9 ticks on the ES. That put us at plus 375 on the morning session. Today it took 20 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 23 trades this morning. So there was a lot of trading going on. It's because the markets were really, well, they kept whipping around, and it was, it was tough today. So if you got stopped out a bunch in demo today, or even in a live account, the trading today was kind of tough compared to how it has been. But anyway, on the month now, we're at 59.57. That's over 11 days, averaging $541 per contract per 2-hour trading day. And I am now at my 167th consecutive day of getting my goal. So this morning we were up 375 this morning. On the year now, we're up 81,414. That's over 192 trading days, averaging $424 per contract per 2-hour trading day. Okay, now if you have not become a CFRN partner, passport holder, and you want to be, we've made it easy and affordable for you. And I'm actually thinking of a plan I got to run by Dwayne that I think is going to be beneficial to a whole bunch of everyone, a whole bunch of people. Yeah, so go to eminifuturestrading.com, eminifuturestrading.com, and just follow the instructions there. Now, here we go. We get the trades. All right, so we came in and it was really choppy to begin with, and I was looking for it to get up above this trend line right here. It finally did get up above that trend line, and our first trade on gold, we only picked up 2 ticks. The next trade, we picked up 4 ticks, put us at plus 6. And the next trade, we picked up 4 more ticks, put us at plus 10. We missed a trade there, and there, all which would have been profitable trades. On this one right here, we picked up 5 ticks to put us at plus 15. Then just a couple ticks here to put us at plus 17. Then somewhere in here, we stopped out. Here it was, over here. I think that was a break even. This one we picked up a couple ticks to put us at plus 17. Then we stopped out there. And that put us back down to plus 9. Then I believe this was a break even. And another break even. And on this one, we picked up 4 ticks to put us at plus 13. And then this is the one that I was talking about. It was right at the end of the session. And I was looking at it and I said, okay, well, we got a long here on gold. And I was looking at the DOM and I was trying to read the DOM and see what the DOM was going to say. And the DOM was saying it was going to go up to right here where it went up to 1909, I think, or 1908.9, I think is what it was. Yeah, because we got in at 7.8 and we picked up 11 ticks on that, but it just snapped right up there between here and it just snapped right up there and took us out at the target and then just came right back down to our entry point. But fortunately, I actually put a target on that trade. So it took me out of the target. Now the YBR trades, again, Dwayne was mentioning yesterday, if you have the YBR color and you get a close on beneath the BBC, those are usually going to work out pretty well. And, I've been looking at it and looking at it in that light. And, that will filter out some of the trades, but it does seem to work pretty well. Now, that being said, we're going to move on to the next market. Okay, on the euro. We actually traded the euro today. We had 1 trade and picked up 2 ticks, and that was all there was on the euro. The euro was a complete mess today. Crude oil, Dwayne, just so you know, I didn't see Val put it through Telegram. She might have already, but man, Microsoft rebooted on me last night again, so my Telegram's not open right now. But okay, we need to roll crude oil to the Z contract. Okay, tonight. All right. And let's go here. Telegram Anonymous. Yeah, okay. Let's go here to Crude. All right, so we started out Crude. We had to stop out. We were minus 8 ticks right there. Then we had a break-even trade there. We picked up 8 ticks there to put us at break-even. And then we grabbed one more tick right here to put us at +1. During the break, it looks like there was a shorting opportunity right in here during the break. And that was pretty much it for the Crude today. The ES, we traded the ES 7 times. So it did have some opportunity, but it wasn't really trending in one direction like we like it to do. Hang on, I'm still scrolling back to get to the beginning of this. Okay, here we go. This was our first trade on the ES, was a break even. Our next trade was also a break even. We missed that one. We picked up 6 ticks on this one and 4 ticks on that one to get us to +10. Then we had a break even trade there. And I'm missing something. Okay, this right here, I forgot to add that. Then we stopped out to put us down to +2. And then over here, I picked up 7 ticks to put us at +9. We had a break even there. So there's one trade that I missed that I didn't put in. But that's because I was all over the place this morning. There was a long trade here. This is during the break. A short trade here during the break. A short trade here during the break. A long trade there during the break. And that was pretty much it. Okay, so again, I'm going to roll it right now. Okay, you roll forward. You got to roll your Crude to the Z contract. Okay, roll Crude to the Z contract. So let me go over here and roll my DOM. Okay, back to the spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the 15th day of October 2020. We made 2 ticks in the euro, 1 tick in Crude, 24 ticks in gold, and 9 ticks on the ES. Put us at +375 on the morning session. And today it took 20 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 23 trades this morning. So on the month now, we're up 59.57. That's over 11 trading days, averaging $541 per contract per trading day. We are now at our 167th consecutive day of getting the goal. And on the year now, we're at $81,414. That's over 192 trading days, averaging $424 per contract per 2-hour trading day. Okay. Now, I know I say this all the time, but these are unprecedented times, and we've made it easy for you to become a partner and passport holder, easy and affordable. And you know, I hope and expect that these times will continue, but you should take advantage of it now while you can. All right. If you have not taken a free trial with us, I don't mean a free trial, I'm sorry. If you have not become part of the CFRN family, go to the homepage at EminiFuturesTrading.com. Go to EminiFuturesTrading.com, and there you will find everything you need to become a passport holder today, so you can be in a partners meeting tonight. Okay. All right. And with that, we'll pass back out. Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes. Yes, I am ready.
Want to take a minute, clear your throat?
Yeah.
I hate when I start to talk and my throat's all choked up.
Yeah.
I just shut my mic off.
There we go.
There we go. I
Okay.
can see your
Recap of the recap.
Today it took 20 minutes and 4 trades to get to $100 per contract.
Good job.
Thank you.
Let me get our feed up and running over on the old Twitter. There we go. That would be Twitterizing and YouTubing, and we're just like all the other cool kids. Except we're not. Actually, we found out those kids aren't cool, but
No, they want to be like
we
us.
reinvented cool. So, anyway.
That's right.
All right. So, did anything big happen this morning? Any world-shaking news events of any kind?
No, there really wasn't. Well, the Philly Fed, I think. Let me go and check it out. I'm pretty sure that the Philly Fed came in like.
That sounds like something you
2.5.
should put on a bagel.
Yeah, I know. Yeah, the Philly Fed came in at 32.3, and they were expecting 14.4, so it came in about 2.5 times what they were expecting. And unemployment claims still coming in higher than expected, and I don't expect that's going to change. I know my son just added to the job force.
Well, good for him. Where'd he go to work at?
Lowe's Foods.
Oh, okay. Is that like just a grocery store chain?
Yep, it's a grocery store.
Okay.
And they have a bunch
out
of them
here.
all
We have
around.
Lowe's Home Improvement. Is it the same company?
No, it's not owned by the same person. As a matter of fact, one of our partners, Greg, he's friends with the guy who owns the Lowe's chain, the Lowe's Foods chain. Lowe's Home Improvement. What I like about them is I get an automatic 10% discount because I'm a veteran.
Uh-huh.
But they don't do that at the store. But now I get a 10% discount because my son works there. So,
Wow, you get a 10% discount on your groceries. That's pretty cool.
yeah. Jake. I mean, it was easy. He had figured this all out before we even went, and we went there, and they hired him right on the spot. He said, "Start work tomorrow, 4:00."
And that's how our nation recovers.
Yep.
People just have
Go
to go
out,
back to
get
work.
a job.
Yeah.
And
Gabe-
and that's the
Gabe-
new
Gabe's-
workforce.
I don't think I mentioned Gabe's working. He's working the graveyard shift at Amazon.
That's good.
Just good old fashioned labor, stacking boxes, that kind of stuff.
Oh, good. It's good for him.
Yeah. So he's been there 5 days now.
5 days, and Jake's been there. Well, today will be his third day. Today will be his third day. But I don't know. He just pulled in with his girlfriend, so I don't know if he's going to work today or not. He may have today off.
Okay.
But
All right, guys. Well, let
anyway.
me go ahead. Finish what you were going to say.
No, that was it. I was done. I was going through the news events. The unemployment claims came in a little worse than expected, and I expect that to continue as long as the government's still handing out free money. When all these people have to pay taxes on that money, then we might see that unemployment claim number fall because they're going to have to go get a job so they can pay their taxes. But import prices came in as expected, and natural gas came in better than expected. Crude inventories came in better than expected. So, my numbers for crude and for the ES for the week. For crude, I have 41.15, which is a significant difference from where it was at when I actually said it this morning. And
Right.
the ES, I have 34.80 and a half, and that's still a significant difference from where I said it. So, that's for the week. Those are my weekly numbers, and we'll see where we stand next week on Wednesday.
Well, the ES definitely taking a bit of a tumble. And guys, this is what I was cautioning you about this morning in the discussion group when I said, don't be too quick to fall for this rally. See how we're consolidating here at this weekly zone. Before I'm ready to start thinking long term, I want to see us get back above this 91, 92 area, this weekly zone here. But on the daily chart, it looks like this. Okay, that's the all-time historic high. That's the most recent swing high. And there's the bullish cross. And once we have a bullish cross and the rally runs out of steam, what does it normally do on every time frame? Every market pulls back to the BBC. Is there some kind of universal law that says it has to? No. But go through the charts and you'll see that it almost, well, price always reverts to the mean, which in our case is green, the BBC. Price always reverts to the mean. Does that mean it has to be this candle that comes down? Nope. It could drag into tomorrow, final day of the week, or something could happen and we get a turnaround. You know, you got to embrace all the possibilities. But just looking at this daily chart, to me, it would appear that the most high probability thing to happen is for this rally that we were just looking at on the 30-minute chart. Which is this wick. See, on the 30-minute, it looks quite convincing. Well, not so much now that I've explained all that. But see, the heavyweight is still overhead. So, okay, guys, I gotta take care of something here real quick. Just give me 1 second.
Okay, and Dr. Tom's coming on, right?
Yes.
Okay. I'm thinking.
Hang on, I'm sorry guys to hold you up like this. I'm having to try to answer this text.
Okay.
All right. All right. The Logic 247. We have two alert services. We have the Logic 247, which it's around the clock, 24/7. Starts Sunday night, 6 p.m. Eastern when the market's open. It keeps on trucking until Friday afternoon at 5 p.m. when the markets close. These alerts come out individually, one at a time. So far, this week, since this past Sunday night at 6 p.m. Eastern, we've issued a total of 52 alerts. 8 never triggered, still waiting on 1. It gave us 43 actionable alerts. 7 of those have been stopped out. So we currently are at 16% of actionable alerts stopped out for the week. So far, we still have the rest of today, we still have tomorrow. Now, yesterday we were at 22%, today we're at 16%. What we've averaged over the last 115 weeks is 20%. Okay. Now, let me show you. I'm not going to break every one of them down, but I want to give you an idea. That recap that I just showed you, this is what the alerts look like. It's like, so far today, because of all these up here, there's been nothing to do, because as you can see, these are all sort of running in the right direction. This one here, this is a short on crude that was worth $1,000 per contract traded, with no exit signal when it was recapped, which means it's probably fallen farther at this point. His 780 on crude. This was 1,080. This was $835 per contract on the Russell short. S means sell. T is initial target. And on a short, the second target is potential support. The third target is potential support. And then the final trade to target is the weekly trading zone. Okay, so this was worth $835 per contract traded. S&P short 34.49 to 44.47 to 34.40. Down to the zone, 762.50 per contract traded. This was a little small ES, 137.50. Here's an ES, 337.50 per contract traded. At gold, $170 per contract traded. So I just want you, here's NQ, $1,165 per contract traded. Hey, are we really giving this away for $97 a week? Michael? He must be on the phone. Just kidding. Yes, so we will be rolling crude tonight. Thank you very much for reminding me, Tim. Everybody be reminded. So this is how the logic, see, that's what it looks like when it gets stopped out. It's a big red X. And when you got these little Z's, that means it just never triggered. Okay? All right, so now you know what the logics look like. So now that you maybe better understand that, maybe this makes more sense. 52 individual alerts issued since Sunday night at 6 p.m. Eastern. 8 never triggered, 1 waiting, 43 actionable, 7 stopped out, so 16% of the alerts stopped out. Our average over 115 weeks, 20%. Now, I said 2 alert services. The other, the granddaddy, the Concierge Trade Alerts. And I'll pull these up. Now, these don't come out one at a time. See, the logic alerts, that's based on whenever opportunity presents itself, okay? When opportunity presents, bang, out goes an alert. The Concierge is a little different. It's a static report. In other words, it comes out shortly after the Globex open. Last night it got out at 6:15 p.m. Eastern. Consider being long, at or above 3,500. Short at or below 34.71. So as soon as the alerts come out, you want to go to your chart, put a couple lines in the sand, long side to short side. Everything between those two numbers is the market trying to make up its mind what it wants to do. And once one of these numbers is tagged, that's usually the direction for the day. Some days we have two-sided action. We got the S&P, the Dow, the Russell, crude, NQ, gold, and silver. Okay, so you got your screenshot. The daily price looks like it still wants to pull back to the BBC, which is down 34.06 on the daily. Now we'll go to the 30-minute S&P chart. Okay, now these are all current weekly trading zones. The alert last night was to be short 34.71. And that happened right about here. Sell 34.71. Okay. So we dropped to the zone, consolidated. Only 3 things happen at a weekly trading zone. The most likely thing is consolidation, what you see right here, and what we're having right now. The second most likely thing is rejection, which is what that candle is. See how when the candle closed, all that was left touching the zone was the wick. The price was rejected, okay? So primary thing to look for is consolidation. Second, rejection. The third and final thing is called the slice. That's when price slices through a zone like it's not even there. Doesn't happen that often, but it does happen. You can see right here, this candle, it just ripped right through that zone. But what typically happens is when that move runs out of steam, price will retrace back to the zone that it ripped through. Since it failed to be the good support we were anticipating, wonder if it'll be good resistance. And the answer was yes on that test and that test. And then that brought us into the alert last night, 34.71. Now, important prices in important areas are almost always tested. So, I mean, you literally could have traded this one alert, this one number, once, twice. These are 30-minute candles, 3 times, 4 times. Now we dropped to the zone. Now there was also Logic 247 alerts that went along with the Concierge. It's like a hand in a glove kind of thing. It takes you a minute to get used to it, to catch the rhythm. But if you put your mind to it, ask for help, ask lots of questions, you'll get it. So, 34.71 minus 34.35. That's 36 S&P points from here to the zone. Boop. 36 times $50 per point. It's $1,800 per contract trader. Okay. You got in here and you got out here. Now this isn't a woulda. We're not the woulda, coulda, shoulda people. We do everything very transparently. In the room in the morning, Michael puts on and takes off trades live in real time, right in front of you, so that you can see how it's done. The alerts are sent to you before they happen, not some historic after the fact kind of a picture. The call to arms last night, to be short, 34.71 went out at 6:15 p.m. Eastern. Okay. Now, if I jump over to the Concierge, let me see if I can find the corresponding. Yes. Okay, let me show you. So, while the Concierge had said you should consider getting short at 34.71, we had an ES alert that said to consider being short, or yeah, to consider being short at 34.70. That number again? 34.71. Okay, so see, there was one number off. 34.70 down to the zone. Then another ES that took you from 34.62 down to the next zone. And then another ES that took you all the way down to the lowest zone. The logic alerts and the Concierge alerts typically run in the same direction. But, all right, so we figured out that from the entry to this swing low, $1,800 per contract traded. An exit signal printed right there. Okay. All right, let's go to the Dow. Now, do you guys have this on your chart? Yes, Mike B, there is one more zone below. The lowest weekly zone this week is down at 3373/3374. Let me refresh this page and see if it'll come back different. Now there's that gap. I got this huge data gap. I'm not sure if somebody knows what happened on the Dow last night. Let me know. Anyway, I'll go back to the alerts. I was just trying to show you how the Concierge and the logic alerts complement each other. It can give you added confidence in any particular move. So, okay, back to the Concierge. On the Dow, consider being short at 28,333. $28,333. I'm not going to talk too much about this one because I'm not sure what happened to the data. There's a problem with this is where it said to get short, and this is where it went to the zone that was the target. Now, if price really did all that, let's see, 28,333 minus 28,100. It's 233 points at $5 a point on the Dow. That's $1,165 per contract traded. Okay, I gotta figure that out. That does not look right. All right, next the Russell. Last night's alert on the Russell was to be short 16.13. Now, we have a current weekly zone at 16.16/17. And then the final zone for this week on the Russell is down at 15.81.82 for this week. $81.82. Okay. 16.27. That is a current weekly zone. 27.28. And 36.37. That's current. Okay. So as this thing broke over the last couple days, last night 16.13, we dropped to a low of 15.97. So that would be 16 points at $50 a point. $800 per contract traded. However, getting out of a swing low or swing high is quite difficult because you don't know it's a swing high or swing low until after the fact. So we have another tool here. It's called the exit signal. This little black line, it's called the step line. Okay, when you're in a short, you really want to see that little black step line on the left side of red and falling. When that step line crosses over red falling, that's a sign the move may be running out of steam. So on a short, it's the first green candle that closes above the step line, and that would be 16.04. So that would be 9 points from the entry to the exit signal, 9 points, $50 a point, $450 per contract traded. Now we've got a bullish cross. We're starting to move higher, but again, and I'm not saying that you can't put on any long trades in today's session. There was a question asked in the discussion group just recently because I gave the number, which seemed very far away. And the market structure may set itself up in such a way that we could find safety in some long trade on the way there. But I don't think we're going there. I mean, I always defer to the larger time frame. Now, what could happen? Important prices, important areas, almost always tested, is if we fail here, then this will have turned out to be just a head fake. We'll come back down and trigger 1613 again and make a run at the lowest weekly trading zone this week on the Russell. Okay. All right. So after the Russell comes Crude. Crude is, I believe I mentioned yesterday, has somehow seemed complicated of late, but nothing about that looks complicated, does it? All right, last night's alert said to be short 40.50. Now remember, we're just going over the concierge now. We already scrolled through the logics. Short at 40.50. 40.50. $40.50 to the zone below. Is that a current zone? 39.40. It is. Yes. But there's also a zone at 40. Okay, at 40.75.80, and then there's one at 40.15. Is that right? Yeah, 40.15. But for those who do it, guys, this hasn't been my best week. Well, I'm not talking about trading wise. I'm just talking about my head, or I've been, how do they say that, under the weather. Anyway, so we got a zone there at 40.15/40.20. I wonder if this is how Joe Biden feels all the time. I'm not saying that sarcastically. I'm not trying to be mean-spirited at all. I mean, we're all, I was hoping I would wake up one day younger today, but turns out I didn't. I don't know what happened in your town, but getting the flu, you get that brain fog kind of thing going on. Just trying to get beyond that. All right, so from 40.50 down to this zone at 40.15/20. That's a $300 per contract move. Okay. Now, if you stayed with it, and because your step line is on the left side of red and falling, all the way down, we didn't cross over till here. Here's your exit signal right there. See, the step line's on the left side, falling, falling, falling. Price starts to walk sideways, but decides to fall some more. it actually ends up spiking the zone. That is there's still one more zone below that. Okay. There's still one more zone below at 3770/75. So we go from this zone down to this zone, back to the zone. Price always reverts to the mean. The mean is the green line. The BBC stands for bull bear cross. The price gets above the green line. We're bullish. We anticipate higher prices. The price gets below it. We're bearish. We anticipate lower prices. And that's what happens every day. And when price has made its run to the upside, it always comes back home. Now this pullback to the BBC almost, well, the pullback to the BBC holds more often than it doesn't. But it has to not hold at some point, otherwise we'd have a flatline market. When it fails to hold, in this case, this is what we call a bearish cross. So that's when we know that we're, from this point right here, we're only going to be looking for short trades until when? Till price gets back above the BBC. And we're going to be real cautious. And I'll just leave it at that for now. 40.50. I think going forward, whenever I lose my train of thought, I'm just going to go the thing. You know, the thing. Well, it's a toss, or I might just say the Mormon guy. It's a toss-up. I haven't decided. Send in your cards and letters. We'll get an official tally. Nah, really. I seriously, you know, I always heard about how politics was nasty and dirty, and we were taught that. I was taught that in elementary school, you know, growing up. Politics was a dirty game and all, but as an adult, I guess I had my mind on other things, you know, trying to build a life, all that, build a business, other things. But these last few years, how much power politics or politicians, how much control they have over our lives. That's a lot of power, man. And I guess that's why they get so power hungry. Because, I don't know. You know, when I wake up every day, I'm thankful for the grace I have to run my life. Imagine waking up every day knowing that you got to run a country. That's it. The head, how does it go? Heavy is the head that wears the crown. Yeah. So, I guess I must admire those who choose to become politicians, at least if it's for the right reasons. If it's corruption, power, greed, then that's a non-starter. But those that really do just want to serve their fellow man, Fred voted for the thing. Oh, and there's a question from Ray about the Russell. Let me bring the Russell back up, Ray. I'll get your question covered. Okey-doke. Okay, Ray's question. Dwayne, on the Russell, would your entry point have been at 1606 for the bullish run? No, because you would be, you never buy below the BBC. Price has to get above. So had I been here studying this and wanting to put on a trade, I might possibly have gone long this candle, because we've got a close above the BBC, we've got an open above the BBC, and we've got a pretty reachable target, which is the zone overhead, 16/17. So, but yeah, definitely not 1806. Or wait, what number did you type in? 1606. You got to get above the BBC. So this would be the earliest I would have considered going long. But in all honesty, I would have probably just left it alone if I'd have been sitting here at the moment. Because I just have a feeling we're not done to the downside, and I could be completely wrong. Okay. Well, let me not take up too much time pontificating. I answered your question, so thanks for asking. Now, like here on crude, we've made a nice pullback, right? In fact, our sell signal last night, Concierge, was 40.50. And how many times have we seen those things trigger again? So that's what would keep me from getting long here, even though, I mean, certainly anybody that went long from this point way down here had a chance to make money. Now we're reaching a point where this thing could just trigger and do the same thing all over again. The market kind of loves to repeat itself. But what a beautiful run from 40.50. From 40.50 to 39.50. That's $1,000 per contract traded. A $1 move in crude pays $1,000 per contract. 40.50 to 39.50. $1,000 per contract traded. So if you follow the blueprint, which is something you receive when you become a passport holder, it walks you through the process. It's called the 2420 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months in a perfect world. Okay. You start out in the demo account in the simulator as you're learning the methodology, learning the strategy, trading the alerts, getting the feel of how to trade those as they come in. You want to put together 10 consecutive days in a row where you reach your goal in 10 trades or less before you put one live dime in the market. I know some places encourage you, call us this morning and you'll be trading this afternoon. Well, you could call us this morning and you could be trading this afternoon in the demo account. I mean, you're going to do what you're going to do because it's you and it's your money and it's your trading business. But we're going to encourage you to do the smart thing, which is to trade in the demo account till you have those 10 days. And the blueprint will give you the green light to go live with one contract. After you start trading one contract, your goal is to increase your account balance by $2,000. Then you get the signal to add a second contract. You're adding the second contract with the profit you earned from the first contract. And then each time you increase your trade size per the blueprint, you're always increasing with profit you earned in the market. Now, if you follow that, and if you follow the rules that say anytime you have 2 days back to back where you don't reach your goal, come out of live, go back to demo, book a mentoring session. If you actually do all that, it'd be really hard to blow up your account. I'm not going to say you can't, because you can, but you'd have to break a lot of rules. Okay? So, if you have questions, ask. There's always somebody around to help you. Okay? Let's see. Fred says, so we don't have the wind at our back now in crude. Also resistance of BBC, step line, blue and climbing. Please discuss if you would take this again. And the doctor is in. Okay, Dr. Toms is present and accounted for. Okay, Fred, to answer your question, since crude just got back above the trigger, would I short it right here? I would be hesitant to. Okay. what I'd rather see is it maybe go up and hit this zone and get slapped down. Yeah. Now you could sell 40.50 with like an incredibly tight stop, like 40.60. I mean, literally risk $100 because this thing could drop like a rock. But you're right. You got blue and climbing. You're above the BBC. Price really does look like it wants to go higher. Okay. So trying to be as honest with you as I can and not put it in a bunch of fancy words. Now, Dr. Tom, I am getting your mic open, but I had a flurry of questions here. Venus says, crude is back to 40.50, but it came up in an uptrend fashion. So at what point and how do we determine if this signal could be taken again? We have to wait for it to get bearish again. By the time we get that confirmation, price has moved away from 40.50. Yeah, okay, that's interesting. You guys both almost had the same question. That's good. Good. I teach everybody the same thing. We are back to the trigger. I want to see the market try to go higher and fail. Because I'm not seeing failure right here. So, yeah. And we also know that we would be shorting into blue and climbing. We'd be shorting above the BBC. So a lot of reasons why I would not, multiple reasons not to short this. And we can talk about it more tonight in the workshop. All right, Dr. Tom, I'm coming. Let me get your mic open. Because it's Dr. Tom Day. Dr. Tom, welcome to the show.
Well, thank you very much. How are you doing, Dwayne?
I'm doing good. So good to have you with us.
Thank you very much. You're too kind.
Shall I send you the...
Start being meaner.
Shall I send you the screen?
That would be a great idea. Okay. I would appreciate that.
And we'll finish up the recap, guys, after we talk to Dr. Tom.
Show my screen.
Please sign in. Thanks.
Okay. There we go, the Financial Education Series. And today's subject is the Bank of Gold. Have you been down to the Bank of Gold lately?
I have not. I don't get out much.
Well, if you open up an account there, you'll get a free toaster.
Is that true?
No.
Remember, you know, I'm sure we have people in the audience that aren't old enough to remember that banks actually used to give you appliances to open a savings account with them. Toasters were a real big one for a while.
I've still got a real nice tool set. You had several different choices. I think it was actually a toaster oven by then, and a nice toolbox with all kinds of tools in it. I'm kind of small TV, and I took the tool set, and I'm still using it. Don't have the bank account anymore, but I still got the tool set.
Hey, that makes you the winner.
Yes, sir. Yes,
Well,
sir.
Tell us about this Bank of the Bank of Gold had sort of a rough week.
Yeah. But it's still doing its job. It's still protecting dollars. And, it'll fluctuate. We see this a lot. But overall, gold is still in the best place to be as far as banks. There's a number of different kinds of banks, as I'm sure you're aware. And let me just scroll down to a couple of them that, there we go, many different types of banks. These are just a few of the kind of banks that we have in this country. In most countries, central banks, commercial banks, and so on. The ones on the left are the ones that are still pretty much active, and the ones that most of us would have experience with. Some people on the right side would have experience with credit unions. Savings and loans, they pretty much killed them. The commercial banks just don't like savings and loans. And so they've, with their big lobbying power, pretty much killed out the savings and loans. Mortgage banks, we don't think of our mortgage brokers that way, but there actually are mortgage banks that issue mortgages. State banks are a rarity. North Dakota probably has the best known state bank. They have by law all North Dakota funds have to be deposited in the State Bank of North Dakota rather than the federal bank. And so then the interest that they earn on the state money is used to make loans to municipalities and so on. And they're able to get infrastructure built like sewage plants and, you know, that kind of thing for half what it would cost them to issue bonds. So that's something I think is going to be upcoming. In private banks, most of us are not rich enough to ever walk into a private bank. I mean, I know with all the money you make trading, Dwayne, you probably, you know, have a private bank and so on. But
Yeah.
but central banks, you'll never directly deal with them, but they affect you hugely. The central bank of the United States still will not call itself a central bank. They call itself the Federal Reserve System, but that's what they are. And they're, as far as I'm concerned, the evil empire. Commercial banks, that's what most of us deal with. Checking accounts, savings accounts. If you have a brokerage account, you're dealing with the investment bank. And then, of course, there's the two kinds of banks that really will help you keep pace with inflation. Land banks and gold banks. But let's go back up to the top here real quick and just look at what the Bible tells us about investing in banking in general. I always like to tell people, I don't give financial advice, whether it's on the radio or at conferences or webinars. I give general financial information, but I don't give personal, specific advice to anyone, because although I used to have every license that they have, the financial planning, I gave them all up when I retired because I, frankly, was too lazy to keep on doing all the continued education for 7 or 8 different licenses. So people often ask me what they should do in this situation, or one of the most common questions I'm getting now, that the number of people in America that own physical gold has increased by 10 times since the scamdemic started. You imagine 1,000% increase. I used to speak at the International Money Show, and I'd have several thousand people there. I'd ask, how many people here own gold? And usually around 10% of the people would raise their hands. And I'd say, okay, now if you don't own it in physical form, if you don't have physical possession of the gold, if your only proof of ownership is a piece of paper or a statement online, or maybe you've got a gold IRA, so you've got gold up in Delaware in a vault, but you have no access to it. So if you have physical gold that you have ready access to, leave your hand up. And 80 to 90% of people would lower their hand. People think they own gold because they've got a gold ETF, but they don't. So
Right.
So when people ask me, well, how much of my money should I put in gold and how much should I keep in cash in the bank for safety, I just ask them to think about this. Number one, you need to pray about it, because the Bible says that God knows the end from the beginning. And so it's his money anyway. All of that we think of as our assets belong to God. So we're just stewards over it. So, check with the boss. But then think about this. You put money in the commercial bank and you're guaranteed to lose, 3 to 5% a year. depending on what the inflation rate is. It's averaged 5% for the last several decades. Now, if you took that same money and put it in the bank of gold, every time the dollar goes down, gold goes up. Now, it's not in lockstep. In other words, it's not a direct inverse relationship, but over any period of time, it is. Because as the debt increases, we're probably going to be at a national debt a year from now of $30 trillion. Does that scare the socks off you?
Yes.
It does me. When Obama left office, everybody was upset about him doubling the national debt, and 43 cents out of every dollar was borrowed money. Well, if Nancy Pelosi gets her way, it's going to be 80 cents out of every dollar. And I don't think you can find any economist who will tell you that that's a sustainable proposition. It just can't be done. So if you, instead of putting money in the bank of the government, and you instead put it in the bank of gold, gold bullion is very liquid. You can always liquidate that at the drop of a hat in a dozen different places in your town. Now, we're not talking about investment grade gold there. It's a different category. But regular just bullion, if you're looking for protection, it's going to protect your money a whole lot better than money in the bank. So my proposition is that except for the stuff that you need for everyday purposes, why not put your money in the bank of gold, which means buying gold and having physical possession of it. The bank's vault is your safe, and you can have access to it anytime you want. But instead of it sitting there losing value in the commercial bank, you're actually making money, have it in gold. So just consider that as an alternative. Okay, the three main investing principles of the scripture are these. Safety first. So why am I showing a picture of myself as a firefighter? Well, this picture is on the front page of the Palm Beach Post-Times. This is right after we put a fire out in the house, and we were just basically watering it down at this point, to make sure there's no embers that are going to catch on fire again. And after it was published in the newspaper, I got called into the chief's office and got a serious dressing down. Do you see anything wrong with that picture there? Well, I didn't have my
Not sure what I should be looking for.
Well, number one, I don't have my face shield down.
Okay.
And number two, I'm not wearing gloves. So my argument was, well, the fire was already out. The guy behind me, he'd even unbuttoned his jacket because it's hot in Florida. But anytime you're on a fire scene, you're supposed to be fully bunkered out, as they call it. Okay. And so I got in a lot of trouble for not putting safety first. Mm-hmm. So I think a lot of people get seduced by high profits. I talk to people every day that put money into a fund or the management of some guy that shows them a great track record, which might not even be a real track record. And they get seduced by the potential profits, and they forget to do the due diligence and put safety first. The second thing is, and we'll see this in Matthew 25 in the Parable of the Talents, God expects us to grow what he's given us. Now, it would be cool if we could do what this guy's doing, just take $100 bills and plant them in the ground and they turn into $1,000. Fortunately, it doesn't work like that. But the Parable of the Talents, which a lot of people misinterpret as being all about the unfaithful servant and him being fearful and burying the money in the ground, it's also clear in there, as we'll see in a second, that God expects us to grow what he's given us. I have people tell me, well, all I'm worried about is just keeping what I have safe. I don't care about growing it. Well, then you don't care about God's plan for you, because he wants us to grow what he gives us so that we can use it for his kingdom. And finally, diversification. I've traveled all over the world speaking on biblical economics in churches large and small, and a lot of times they have to have interpreters or translators. And I had a really interesting experience in Bulgaria one time. I was given an hour to speak, but the pastor said it's going to take 2 hours because everything you say is going to have to be translated. We have some people who speak English here, but most of them don't. Well, it ended up taking 3 hours. You know, I asked the pastor, what was going on? I'd say one sentence, and then my translator would say a paragraph, and he says, "Oh well, you know, he was faithfully translating what you said, but then he was giving his commentary on what you had to say."
Yeah.
So, but anyway, whenever I would have a new translator, I'd always ask him this: do you have this thing in your language? Don't put all your eggs in one basket. And invariably, they would say, well, blah, 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 whatever their language was. And yeah, they had that saying. And that's basically what Ecclesiastes 11:1-2 says. It's in fancier King James language, but what it boils down to is that you don't put all your money in any one asset class. You know, if you're the best house flipper in the world, can the housing market fall apart on you? Sure.
Yep.
If you're the best trader in the world, do you want to have every penny you've got in your trading account?
Nope.
I don't think so. I always encourage traders to, you know, when you make a nice profit, take some of it off the table. You got to know when to hold them and know when to fold them, know when to walk away. You know, take some of that out and put it in something safe. So whatever kind of investing people do, it should be diversified. So let's look at the parable of the talents for a second. There's the master giving these bags of gold. Now, we're at a disadvantage being raised speaking English, because so many preachers, when they talk about this, they just get it wrong. They talk about, we use all your talents for the Lord. If you play clarinet or you know, you're a good artist or whatever. It's not what it's talking about at all. It was money. Okay, it was a bag of gold, whether it was coins or nuggets, we don't know, but it was the equivalent of about 16 years.
I have sat through sermons where it was preached the other way, and of course I didn't say anything, you know.
Because you're too nice, right?
Well, I try to be nice, but it's hard in America today. But no, I would never want to, you know, yeah. What good could, in fact, that's a good moral dilemma. You know that this person needs to know this truth. How do you get this truth to him without humiliating him or making him feel bad, or, you know? I just,
well, you do it privately for one thing.
I was just visiting that church one time as a guest, and so I said, you know, God, I'm gonna have to leave this in your hands. So I'm sure God will get the word to him.
Well, you know, it was an innocent mistake. I was in one church, actually it was a part of the church, and the pastor, he just had this real bad attitude towards women, and he was talking about the donkey that spoke, you know, and prophesied,
right.
And he says, if God has something to say, he's going to speak it through a man or a donkey or a woman, in that order. And I got up and I walked out of that church, and I never went back there again, because that was a little too egregious. That was, you know, somebody.
If he'd have just left out in that order part, I mean, I guess it would have been acceptable.
It wouldn't have been so bad.
Yeah.
But the guy here, you see him in the green cap, you know, like with the X over his head, he was the bad guy, you know, and it wasn't just that he was fearful. I mean, the master calls him the unfaithful servant. And as soon as the master left and went on his trip, which probably took a year or more, I mean, because the faithful servants doubled their money, and with typical investments, most people are not going to double their money every year, right? So it probably wasn't just a 2 or 3 week trip to Disneyland. So instead of even trying, the unfaithful servant went out and buried his. And what happened? Well, the other two guys doubled their money, and the master took the talent, the bag of gold worth 16 years of a man's wages. That would be about $1.4 million today, by the way. And he gave it to the guy who was most profitable. Now, if it was me, it's a good thing I'm not God, I would have given it to the guy who had taken 2 talents and doubled them into 4, rather than the guy who took 5 and doubled it to 10. But the master gave it to the guy who had 10. I would have felt sorry for the guy who had fewer, and I would have given it to him. But the master's trying to, a parable, this didn't actually happen. That's what a parable is. It's just a way of teaching. And what he was trying to teach us was that he expects us to not just sit on what he's given us, but to grow it, like I said, for his kingdom. Not so that you can drive a Ferrari. I mean, if you do, that's fine. There's nothing wrong with driving a Ferrari if you can afford to run the thing. But, basically blesses people who bless his kingdom, who bless the poor, bless the missionaries, the evangelists, the pastors, and so on. So what would be today's equivalent to burying God's money in the ground? Well, a CD certainly qualifies, right? Inflation's 5%.
Now, this is a hard lesson, because I'm just saying, because a lot of people who've got their money in CDs, they know they're not making a lot of interest,
right?
But they also know that they don't, in theory, have a lot of risk, hardly any, right?
Yeah.
And so, on one hand, they feel like they're doing the right thing, just like the steward did in the parable, who hid the money, who buried the money, right? So,
right.
Yeah, and so keep going. I mean, people, we have a very astute financial audience, so I don't think anybody's feelings are going to get hurt. To all those people out there across the world, all those grandmothers that got those CDs and stuff, I'll tell you what, I'd much rather that she have it in a CD than send it to that slick talking guy that called her up about that, gold mine.
The old well or whatever.
Yeah.
It's not that the CDs are bad or savings accounts or whatever, but it's that most people don't understand what it really means. And I think if they did, they would look elsewhere. Because let's say you're fortunate enough to get 1% of CD, which most people can't. Or you get 0.25% on a savings account. Well, the average inflation rate for the last 30 years has been 5%. By the way, this is a little interesting aside, but
so you're not even coming close to breaking even with a CD.
Oh, not even close.
Yeah.
But the government tells us that the inflation rate is 2 to 3%, and the only way you're going to get the real inflation rate is to go to a non-government economist. You don't even want to go to a college economist, because they get most of their grants for their projects from the government. So you go to an independent economist like John Williams, shadowstats.com, and he'll tell you what the true inflation rate is. But let's just use 5% for this example. Grandma's losing 4%. If she's got a jumbo CD of $100,000, the bank's going to tell her you've got $101,000, and technically they're right. Okay. But in reality, in purchasing power, she'll be able to buy $96,000 worth of today's goods and services next year. So she's lost 4% of her purchasing power, even more with the CD. Well, something interesting happened yesterday. The government announced that COLA, the cost of living adjustment for Social Security recipients, people on federal pensions, and disabled veterans. And even though they swear that the inflation rate is 2.5, 2 to 3%, is what they usually say. They only gave them a cost of living adjustment of 1.3%.
Oh my goodness.
So if they acknowledge the true inflation rate of 5% and they're giving them half, which is what they just did yesterday, they'd have to give them at least 2.5%. So that's why they have an interest in keeping the acknowledged inflation rate low. It's really always much higher than what they tell you. Money markets, pretty much the same. Treasuries. Did you know that treasuries over the last 100 years have been more volatile than the stock market?
You know, I should say yes, but I'm going to be honest and say no.
But if you say yes, then you'll sound wise.
Yeah.
You know.
But
Anyway.
let me just sound honest. No, I really wasn't.
No, not that you're not wise, but no, the principle is always guaranteed. It's safe, but that's not why people buy treasuries. They buy them for the yield, and the yield's all over the place. As volatile as the stock market is, treasury yields are more volatile. Corporate bonds, there's a reason why they call them junk bonds. Okay. They have to pay some pretty high interest rates to get people to buy them because they're risky. If that corporation goes out of business, even though the law says that the debtors, or people that loan money, the lenders, I'm sorry, to the corporation and the corporate bondholders, corporate bonds, preferred stock, all of those are pretty much debt instruments. It's just that the corporations would rather issue a preferred stock than a corporate bond because the bond shows a negative on their balance sheet and the preferred stock doesn't. But preferred stock really is just a loan. Municipal bonds, well, we've always been told how safe they are.
Right.
But how many cities and counties have gone bankrupt in this country?
I think there's been quite a few.
They have. And even more what they call taxing districts, like a fire district or a utility district or whatever, that has the ability to levy taxes, and that gets added to your home taxes. There have been hundreds and hundreds of municipal bonds that have been defaulted on. In fact, some economists say that's one of the biggest threats facing the United States, because practically every elderly person in the country, their brokers put them in municipal bonds. We have a state, California, who is technically bankrupt because they're like the United States. They owe more money than their total net worth. But because they're a state, I don't think that our federal government would let them go bankrupt, because that would really look bad, right? But big cities
you heard what Kamala said the other day. She said California is the poster child of how all of America should look, something along those lines. I'm like, really? She said that out loud in front of people.
Humans that had ears, right? Yeah. If you talk about weather and beaches and things like that, yeah, maybe. But I mean, San Francisco is one of their premier cities, and they can't even figure out how to get all the crap off of the streets. So, California's not my role model.
Hey, I just lost your screens.
Well, I saw that happen. You gotta do that.
Let me
make presenter thing again.
Let me do that.
Okay.
That's odd. I haven't seen that happen before.
I haven't either.
Oh, now it's back.
Yep.
On its own. Back to where it said, please sign in, thanks. How much cash should I keep in the bank?
Yeah, by the way, you see this car here?
Is that yours?
Yeah, that's what I use for, just driving around,
Right.
going to appointments. I've got a SUV that I use for regular stuff. Okay. Where was I? We were on the banks and so on. So, insurance companies. They have cash value, life insurance, universal life, even annuities. All of these are guaranteed, right? But who guarantees that the insurance company is going to not go out of business? Because if they do, your money's gone. It's not like a bank that at least has the FDIC. And people say, well, insurance companies can't go out of business. Well, what about AIG in 2008? Not just the biggest insurance company in the United States, but in the world. And of course, the government bailed them out, but they literally went bankrupt. Now, if people ask me, how much cash should I keep in the bank? And how much should I put in the gold? I know what they're really asking is, how much cash should I keep in a government bank? And I know it's because they're thinking about liquidity, having cash in a place where they can get to it quickly and easily. But remember what happened after 9/11? You couldn't get any cash out of the bank. You couldn't get in your safe deposit box. It was a bank holiday.
I've told my story of that morning in the bank too many times to this audience. I know they don't want to hear it again, but yes, you're absolutely right.
Dwayne, that was a bank holiday, right?
Yeah, boy, it was.
Holidays are supposed to be you're on the beach under an umbrella sipping a nice tea and thinking about, do I just lay here and be lazy or go out and swim around in the ocean for a little while? That's a holiday, right? When people are banging on the door of the bank saying, let me in, I want to get my money, that's not a holiday to me. So whenever people say things like this to me, that makes me think about the bank of gold. Okay? So amongst all the different kinds of banks, the central bank is one of my favorite things, fight organized crime in the Fed. If you haven't read Ron Paul's book, do it. All right. It's dry. He's not an exciting writer. He's actually kind of boring. But what he has to say there is not boring at all, because the black seal you see there is the seal of truly the evil empire. In Europe, they have their own evil empire. It's called the ECB, the European Central Bank, based in Frankfurt. Who paid for that huge building there? What is that, like 100 stories or something?
Yeah.
That's coming off the backs of the people who are under the thumb of this socialist European Union. Commercial banks, there's a guy named John Kamada. He's a Christian financial author, and he did the best-selling course, the Debt-Free and Prosperous Living course. His favorite saying is, they're stealing from you. Well, who's they? Well, it's the banks, the insurance companies, the mortgage companies, credit card companies. If you have a mortgage, typical 30-year mortgage, it's years before you get past 10% of your money that's actually paid on the mortgage. The other 90% is interest. And it's only when you get way to the end of your mortgage that you're actually paying, 50%, 60, 70% against the principal. And then what do? They talk you into refinancing. So you're back to where you're paying 90, 92% interest. I won't go into that in depth, but basically the central banks are what the Bible calls usurers. They charge you huge amounts of money and they pay you a pittance. So if you got money in the bank and you have a savings account and you're getting 0.25%, that's good for you. But they're loaning it out at 4% of the mortgage, or anywhere from 8 to 20% if you have bad credit on a credit card. And it's even worse than that, because on that mortgage, for instance, they're allowed to lend out 10 times what they have in the bank. So they're really, if they're getting 4%, they're really getting 40%, and you're getting 0.5%. In what world is that a fair deal? They're usurers. But here's a really interesting thing, and I want to give everybody a test here. I'd appreciate if everybody would just quickly answer this little quiz. Who owns your bank account? Okay. And just, you don't have to type the whole thing, just type in A if you own your bank account, B if the bank owns it, C if both you and the bank own it, or D, you're not sure. Okay. Just real quickly, type it in and tell us who you think owns your bank account.
I'm getting some C's.
Okay. Getting any B's?
Nope.
Anybody with
Nope,
an
I
A?
just got a B. I just got a B.
Okay. Anybody with an A?
Nope.
Okay. Most places, you do have astute people here, because most places, almost everybody answers A. Well, the answer is B. As soon as you put that money in the bank, you don't own it anymore. And that's been the case since 2012. If you're one of the 20 or 30 people in the country that's like me, that's crazy enough to actually read all that ream of paper they give you when you open a bank account, you're going to see that what I'm about to tell you is true, and it's going to make you really upset. So it's not you. On your bank's balance sheet, your deposits are shown as liabilities owed by the bank to the depositor. In other words, it's an IOU. You just loaned your money to the bank. You didn't deposit it in your account, because your deposits are shown as assets at a bank. Now, go down and ask your bank, particularly if it's a nonprofit bank, they have to show it to you to see their balance sheet, see if what I'm telling you is not true. Those balance sheets are audited by the IRS, and so they have to put it down right. For them to say that your assets belong to them is true and it's legal. It's not moral, and they slipped it in on you. I remember back in 2012 when a bank I had done business with for years said, we need to have you sign some new account paperwork. And I said, why? And they said, well, just a few little minor details have changed. Yeah, the minor detail is that I don't own my bank account anymore. The bank does. Unbelievable. But it's true. Why does this matter? Well, because if your bank fails, your IRAs will be converted to bank stock. That's another thing they don't tell you. Do you want to own stock in a bank that just failed? I certainly don't. But here's the real insidious part. That means that your money is no longer protected by FDIC insurance because it's not a cash deposit. It is stock, and nobody guarantees stock. So the bank can be legally wiped out, just as the Lehman Brothers shareholders were in 2008. The people got nothing. They didn't get FDIC insurance. They didn't get SIPC insurance. They got zip because they didn't own their accounts. And here it is. If you want to look it up, this is a long name. They try to make it a little complicated so that people won't take the time to read it. But if you want to write it down, resolving globally active, systematically important financial institutions. And it's a joint paper between the FDIC and the Bank of England, put out in December 2012. It was important that the FDIC get the Bank of England on board, because if people found out what they were doing, they'd move their accounts from U.S. banks to English banks. So they're both in on the scam. When you make a deposit, you're loaning your money to the bank, and the bank becomes the legal owner of the money. Now, this is not my interpretation. This is Professor Richard Werner, esteemed economist. He's the one who coined the term quantitative easing, QE, and then we get QE2, and then we got QE infinity, where quantitative easing is where the government just prints a whole lot more money. He said this, and not just once, but many times in interviews. Although banks are thought of as deposit-taking institutions that lend money, this is far from the truth. A deposit is not actually a deposit. It is not held in custody. It's under the law. It used to be when you made a deposit, they were holding your money in custody for you. They were what's called a bailee. And they had the responsibility to take care for your money. So even though they still use the word deposit in their documents, in the law, that word is meaningless. Courts in various different judgments in various different jurisdictions have made it very clear that if you give your money to the bank, even though it's called a deposit, this money is simply a loan to the bank. And he's not alone. This is Dr. Davinder Singh. He wrote the book of regulations, or at least was the lead writer, on the document that I showed you earlier, where the UK and the US financial markets are more or less being merged as far as the way they're run. And this is a direct quote from him. The money paid into the bank is money known by the principal to be placed there for the purpose of being under the control of the banker. It is then the banker's money. He is known to deal with it as his own. He makes what profit of it he can, which profit he retains to himself. So banks are making huge amounts of money. They're not sharing it with the people who gave it to them, except giving you 0.25% or 1%. You see why I'm not so on DVDs 20. I mean,
Yeah.
This makes my blood boil when I see this. I mean, I want to go up and find these guys and smack them upside of the head. So there's your commercial bank that we trust, right? So this is why I only keep enough money in there just to pay my bills each month, and I'll add a little more in next month and so on. But I keep no appreciable amount of money in the bank because I don't trust them, because they're not trustworthy. Well, how about investment banks? I won't mention the names because I don't want to get sued,
Right.
but they're all the same. They call themselves masters of the universe. Do you remember that movie?
It was a cartoon, wasn't it?
Well, they actually did a movie on it,
Oh.
and 1 and 2 are really outside of the scope of what we would do: mergers and acquisitions, raising capital, issuing securities. But 3, if you have a trading account, you're involved with an investment bank, sales, trading, and equity research, trading securities. And some of them now actually are engaged in commercial banking, because once the Glass-Steagall laws were plowed under, then the Chinese firewall between banks and securities was torn down. So you have securities companies acting as bankers, and you have bankers that have trading departments. It's getting all mixed up. But here's really all you need to know if you really want to understand what an investment bank is. In 2008, when tens of thousands of small businesses, commercial banks, and insurance companies went bankrupt, the investment banks that had donated millions of dollars to Obama's campaign, or who had close ties to his Secretary of the Treasury, Tim Geithner, were bailed out. And they were bailed out with
Two guns.
Oh man, this guy was a dweeb, to put it nicely. And it was our money. They were bailed out with our money. Hey, Dwayne, I'm sure it was just a coincidence, don't you think?
Oh, sure. Sure, it must have been.
But what about all the banks, commercial and investment banks, that they allowed to go under that hadn't donated to his campaign or that weren't buddies with people in his cabinet? They just let them go under. The government was deciding winners and losers. The market should decide winners and losers. I'm sorry, I'm just a free
I think
market
they were called, what are they
economist.
calling some too big to fail? Wasn't that a popular term?
It was. That's why they bailed at AIG, because AIG was a reinsurer for practically every insurance company in the United States and many foreign countries. And so if they'd gone under, then a lot of other insurance companies had gone under. We can debate about whether it was the right move or not, but it probably did save a lot of insurance companies. But what about all the ones that they didn't, all the banks that they just let go under? I think the market should control, not the government. Brokerage firms, look, guys, they make money whether you win or lose. So if you have like an IRA or 401k or even a pension plan from someplace where you used to work that is managed by a brokerage firm, most of them never make more than 4 to 5% a year, even when the stock market's up 12, 13, 15%, because they're not motivated to make money for you, because they're going to make money either way. And if they, there's no such thing as making money without risk. I've heard you say this many times. I've said it many times. You have to take a risk. The only thing you can do is try to mitigate your risk as much as possible. But these guys don't want to take the necessary risk to let you make at least as much as the
Risk
market's
is
making.
the doorway to opportunity.
Yes. A very wise Chinese man said that, right?
Actually, he was from a small town in Georgia.
Oh, okay. Is that you?
Yeah,
Well, what was the small town?
Thompson. Right outside of
Thompson.
Augusta.
Okay. I've heard of Augusta. I went to school in Georgia for a while, Tacoma Falls.
Oh, that's a nice
Beautiful
place.
place.
Yeah.
It really is. The main thing I remember about that is this teenage girl that I was in the same class with. A little piece of wisdom she gave me. She said, "Worry's like a rocking chair. It gives you something to do, but it gets you nowhere." I've never forgotten that. Anyway, they're not motivated to take the risk that they would have to take to make you money. If they break even or even lose a little, make a little, they keep their jobs. But if they take the risk to try and make you some serious money and they end up losing a lot, then they get fired. So they have no motivation because they're going to get paid the same amount whether you win or lose. So they seldom make more than the rate of inflation. I talk to clients and potential clients all day long, every day. They're calling about buying gold because their retirement plan, their 401k, their IRA, number one, they're worried about the government taking them over, but also they're only making just as much as inflation. So the guys who run these funds are primarily lazy, entitled experts who don't really understand money. And I know I'm tarring a whole class of people with the same brush, but it's a fact because the simple fact is that in 2008 the market was down 32% and most retirees lost 40, 50, even 60%. That shouldn't have been, but it's because these guys were lazy. They put them in mutual funds, and as you know, you can't put a stop on a mutual fund, so people lost huge amounts of money. Now, some people only lost 10%. We know who those were, right?
Yeah.
Yeah, they're the people who carefully picked individual stocks, did their research on them, and then they immediately, like I used to do when I was a broker, as soon as I got a fill, I immediately put a 10% stop on it. Sometimes I got bounced out. That's okay. I didn't lose 50%. So Some people lost 10%, some lost 32% if they just owned an index fund. And most people, most retirement accounts, dropped by probably an average of 50%. So there's the investment banks. Now, here's another kind of bank. What do these three people have in common? If anybody has any idea, type it in quickly, because I'm about to run out of time here. Donald Trump, an entertainer, turned businessman, turned politician. Howard Hughes, a recluse who made huge amounts of money shorting silver, and Bob Hope, a funny entertainer. What do they have in common? Well, they were all land bankers, okay? They're people that invested their money in land rather than in banks or brokerage firms. The definition of land banking is buying undeveloped land in the predictable path of development and selling it after it is greatly increased in value. But the key there is the predictable path of development. And how do you do that? All three of those guys made billions with a B of dollars in land banking. It's because they spent millions in research. Donald Trump certainly did that. And I don't know why that happened. My ad block has been updated. I didn't ask you to update my my ad block. Stop it.
Well, it looks, I'm seeing definition, buying undeveloped land. That's what my screen is showing.
Okay, so we're good then.
Okay.
If I can just get the slides to change. Yeah. It says screen sharing is paused. Let me do this. And click start again. And then I can go forward. So land bank is very interesting. I've got probably 70% of my personal net worth tied up in precious metals. And before, I didn't really have anything that I felt safe enough or comfortable enough with. But I found a land banking company that is averaging over 20% a year for me. And I don't have to do anything. When I was a landlord, I was always getting called in the middle of the night because I owned a bunch of rental property. Here, all I do is once a year I pay the tax on the property, and on average it makes about 24% a year. So that's a good option. It's land and gold.
But that appreciation is not liquid.
No, it's not. That's why when I buy my gold, I make sure that my gold is, I had pure liquid gold bullion, and then I have some near bullion, which is, it would be similar to having a laddered portfolio on bonds. And so smaller, less expensive coins that will go up, and then each year I can sell some of them and get income, because this for the last 17 years has averaged 24% a year. So I'm willing to have my money tied up for something like that. Now, you know, brokers and traders say this all the time, woulda, shoulda, coulda. If I'd known back then what I know now, first church I pastored was in the mountains of North Carolina, a little tiny town called Silva. And I made a deal with this lady to buy 6 acres of land from her for $2,000, right?
Mm-hmm.
This is 40 years ago, but I'm actually on my way over there with the cash in my pocket to sign the papers, and I got cold feet. I said, man, $2,000, that's an awful lot of money to just get 6 acres of land. You know, I had my plan, you know, they had 6 natural house sites on it. And then with about $500 worth of bulldozer work, you could scrape off 6 more sites and have 12 lots to sell, plus get the roads done.
Mm-hmm.
And with some gravel. I probably had $3,000 involved, and I could have sold each of those lots for, probably more than I paid for the whole thing.
Right.
Well, today, those lots are almost $50,000 a piece,
Wow.
little half-acre lots.
Wow.
So that's land banking, buying it right. See, they were on the outskirts of town, and of course, the town expanded. Now they're on the inskirts of town. So this is a big land banking project that was done out in California on the left side. That's when people started buying the land, when it was just raw land. And on the right side, you see what's happened.
Yep.
But there's all kinds of banks, but there's no bank that's as safe as the Bank of Gold. As I've often said, if you can't hold it, you don't own it. What is a gold bank? Well, any bank is pretty much the same. It's a place where you store money. Money in a traditional bank loses every day to inflation. I did a video one time called "Is Your Money Safe in the Bank?" And I said, yeah, it's safe from these guys, and I put a picture of Jesse James up, but it's not safe from erosion. So if you put money in the gold bank, it's increasing as the dollar goes down. It protects you from inflation. The address of the bank is the same as your home address, and its vault is the safe or other safe place that you choose, either in your home or if you want to put it in the safe deposit box, you can. But the Bank of Gold, you control your assets, and it's the last financial transaction you'll ever engage in that the whole world can't find out about. Somebody decided to sue me because I was in a car accident and my insurance didn't cover all the losses. They tried to look me up, and I look like I'm worth a whole lot less than I'm worth because I bought gold privately, and it doesn't show up anywhere on the internet. So this is what, if they think about it, everybody wants. You want a bank that will keep your money safe, but you also want to make a profit on it that's greater than inflation. So with bullion or CDs, you don't make anything. And with some investments, you might make more than inflation, but most of them don't. But gold always does, especially the investment grade gold. Most banks can do one or the other. They can either provide safety or profit, but only the Bank of Gold can do both. And that's where all these people are cheering and clapping and screaming, because their money's in the Bank of Gold. That's my story, and I'm sticking to it.
Well, I hope everybody took this to heart, because it's a very real thing. And, there could be a real shakeup coming. This election, I know that, everybody's big question is who will win. Well, my question, of course, is, I want to know who wins. But the biggest question, I think, at this point is, when will we know who wins? And will it ever be called a legitimate election? I mean, with all the stuff that's going on with mailing out all these ballots and finding ballots in dumpsters, and I mean, just all the, on and on nonsense. And
yeah, my wife just told me that the post office has farmed out a lot of the delivery of these ballots to FedEx and UPS and things like that. I mean, it's supposed to be under the control of the federal government, right? And these are private contractors. How many people have just dumped ballots in a dumpster because they were too lazy to deliver them? You're right. We'll probably never know 100% unless there's a landslide for one person or the other. My big question is, what's going to happen after the election, whoever wins it? I mean, it's possible, it sounds crazy, but it's possible that by next January, this won't be decided. And guess who becomes president then?
Yeah, I know.
Wicked Witch from San Francisco. Think of all the damage she could do.
One of our
even
guys,
just in 1 month.
one of our guys posted this yesterday. Let me find it if I can real quick. No, he saw a bumper sticker that said, "Pray this scripture over Nancy." I thought I had it right here.
Is that the one where it says, "May his days be short and another take his office"?
So, yeah, something like that. Yeah, may her days be few, and may someone else. Yeah, that's it. Yeah.
Yeah, there's actually a scripture. And it's not talking about, a lot of people said that about Obama. It wasn't talking about him dying. It's just may his days be short in office, so he can't do a whole lot of damage. By the way, if anybody wants to call me, I always forget to do this, but it's 561-753-5998, 561-753-5998, or you can go to CFRNGold.com and you'll get the Gold Education Starter Package and also invitations to our Monday night webinars, which really are a lot of fun. Just to finish up with the Bank of Gold, how do you make your deposits? Well, you just buy gold. We ship it fully insured. You get it the next day, and that's how you make deposits. And then, of course, your vault is your own safe. I was looking for a picture of a home safe, and I came across this. I thought it was pretty neat because one of the main principles for a safe is not how big and how strong and how hard it is to break in, but how well it's hidden. If people know that you've got a safe,
Right.
I've seen security footage of guys coming in taking a huge safe that's 8 feet tall and 6 feet wide and 4 feet deep, and they came in with a hydraulic dolly, picked it up, and just rolled it out to the truck.
Wow.
They use the company's own loading dock.
Right.
And then they could just break into it at their leisure. So this was kind of interesting because when you close those doors,
Yeah.
it
This
looks like
some
leather books.
Mhm.
And you just stick it on your bookshelf, and hopefully nobody even knows that you got it. So anyway, that's the Bank of Gold, guys.
And
If you don't have an account,
to
open one
get
up.
there, go to CFRNGold.com. One word, CFRNGold.com. And
You got it.
that bumper sticker said, "Pray for Nancy Pelosi," Psalm 109:8. And the fellow said, when I got home, I had to open my Bible and read what that scripture was. Let her days be few and brief, and let others step forward to replace her.
Well, let's hope she never gets there. Because, like I say, she can do a lot of damage in even just 30 days. And then, of course, they have to fumigate the White House. So it's going to cost taxpayers even more money. So I just can't imagine, the Queen of Botox being our president even for a day. It just shivers my timbers.
Yeah. Yeah. Well, thanks, Dr. Tom. Always a pleasure. We look forward to it each and every Thursday. Guys, give him a call. Go to CFRNGold.com. Get that starter kit. Won't cost you anything. You just might learn something. Thanks, Dr. Tom.
Thank you, sir. Bless you.
Talk to you soon.
Bye-bye.
Okay, guys.
Chris, how do you mute this headset?
Let me mute his mic.
It used to be when you pressed in on the one on the other side.
I don't even see him now.
Yes.
Tom, where are you? There. Ah, now he's muted. Okay. All right, so we went through the S&P recap, Concierge Trade Alert. Now we've gone from zone to zone at a bullish cross. Okay. So even though I wasn't comfortable putting out an alert to go long, you had everything in place here, right? You got above the zone, you got your bullish cross. Now you've hit the next obstacle, which is the zone overhead. Now you're just shy of the short trigger where it could potentially trigger again. One thing I want you guys to understand, I see lots of trades that you guys never see or ever hear me talk about, because I made a commitment in the beginning, both with the Concierge and a double down with Logic 247. I will only put out what I feel is the highest probability, lowest risk trade alert. Not the maybes, not the, the 70%ers or the 80%ers, or, unless I fully think, unless I have no reservation. It's a reservation-free alert. I have no reservation. Now, I know it still may not be profitable. It may still get stopped out. We've had 7 get stopped out this week, but so that's also why I don't put counter trend trades in the channel. Why? Is there something wrong with counter trend trades? No. It's just that the degree of identifiable probability is not as high for my eyes as it is for a trend trade. So if I know that over time I can serve you better by giving you trend trades as defined by my 30-minute chart, then that's what I'm going to give you. I want to give you the best that I can give you. And I suppose I could grade them like, okay, here's an alert, I'm not crazy about it. Maybe I'm like half crazy about it. No, let me just give you the best. I mean, giving you the best so far this week. And this is just the logic part. Okay, not the Concierge. I mean, this is me giving you my best. And the very first Logic 247 trade Sunday night, that thing triggered and ran 58 points to the target, hit it right on the nose. Are we on the S&P here? Yep. Here it was, 3482. And at the time, the new weekly zones hadn't come out, and the highest weekly trading zone for the previous week was the final trade 2 target, 3540. 58 points. Pretty as you please. And that's based on 100%. This is my very best that I can do for you. And I wish they all worked out this well. Unfortunately, we know that in life, things don't always come up roses. So here, as we approach where we sold, we had a nice sell-off. I got to see what price does here. I really can't foresee myself taking any long trades until we're confirmed back above 91.92. But see, here's what makes what we offer with the Passport so special. I give you the alerts, both Concierge and Logic, okay, and that's my 100% best, all trend, no counter trend. And then we teach you to find the opportunities the exact same way we find them, using the exact same indicators we use. So for those of you today who wanted to trade this long, okay, if you've been with us long enough, you understand all of my reasons for making trades. So had you wanted to take this long, maybe you did. And if you did, that bell's for you. You did nothing wrong. You did nothing bad. You saw an opportunity. You took advantage of it. That's what traders do. Okay. Tim asks, so if 3471 CTA should re-trigger, does it need to close above and drop, or just one tick above is considered a valid trigger? That's come up a couple times. I think it came up on Crude earlier. You know, Tim, I'd like to see it like, see here how we got back above the trigger, hit the BBC, and sent us back down. See, I'm confident on something like that. Now, if we get above 3471 and start to drop, we're dropping right into blue and climbing, which is counterintuitive, and we're selling above the BBC. And the first cardinal rule is we only sell when we're below the BBC, and we only buy when we're above the BBC. So, okay, so you're, you know, that rule there says that you'd be trying for higher prices. So, yeah, we'll talk about this more in the workshop. I've got to go out on an appointment, so I'm going to have to cut this thing pretty short here. But again, we can talk about anything you guys want to talk about tonight in the workshop. I think the only thing we didn't look at, really, of major consequence, might be gold. And what was the Concierge Trade Alert for gold last night? Considering along above 1909. And we hit the zone up at 1112. And on the short side, short at 1902. And that happened. All right. So it couldn't happen there. Short 1902. Okay, it happened right there. Right there. So from 1902 down to that swing low, 1895, $700, and then it did another 700, and it looks like maybe another 700. And silver. Last night's concierge on silver was to be long above 24.45, and we haven't got there. But it also said if you get the chance, short 24.07. And that opportunity did present itself somewhere up here. 24.07. That one, you know, based upon how you trigger yourself in, and different people use different ways to trigger in. If you triggered in here, it dropped to 24.055. A 2-penny move is $100. So this went, what, a penny and a half? Over here, a little different story on the next trigger. 24.07 down to 23.70, so 37, about $1,800 per contract traded. And that's all the time I got, guys. I've got something I have to rush out and take care of. If you have any questions, you can reach me always on Telegram. I do plan to be in the workshop tonight. I will post Concierge Trade Alerts. I'll do my best to get them out on schedule today on time. And I don't think there will be any Logic 247 alerts because I got to go out on this appointment. But I'm not leaving for, I don't physically leave for the appointment for about maybe another 15-20 minutes. So I'm going to look through the markets, and if I see any opportunities that I feel are truly high probability, low risk, I'll put those and the Logic 247 channel before I go. Okay? Sound good? All right, good word for the day. Yesterday we talked about keeping our cool or staying calm. Today, let's try bird watching. Matthew 6:26. Look at the birds. You may not like the political party that's in power, but you're much better off than the Jewish people Jesus was speaking to here. Their country was occupied by the Romans, and they paid extortionate taxes to keep them in power. They lived as slaves, so they worried a lot. Then Jesus came along and said, look at the birds. They don't plant, harvest, or store food in barns, for your heavenly Father feeds them. And aren't you far more valuable to him than they are? Can all your worries add a single moment to your life? Matthew 26:27. In other words, if you worry a lot, try bird watching. Birds don't know where their next meal is coming from, yet you never see one sitting on a branch having an anxiety attack. So here's the question. Aren't you far more valuable to God than they are? A man who was out of work, despondent and worried about feeding his family, noticed some birds eating strawberry shortcake from a bin. All at once it dawned on him. If God can feed the birds strawberry shortcake, surely he can take care of me too. Even if you suffer from a poor self-image and think you're not worth taking care of, aren't you still more valuable than a bird? So look at how well your Heavenly Father takes care of them. And remind yourself that he'll take care of you too. If anxiety is robbing you of happiness during the day and sleep at night, make up your mind to live by this scripture. 1 Peter 5:7, it says, give all your worries and cares to God, for he cares about you. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.